Thank you, Ray, and UNFCU for the warm welcome. It is great to connect with everyone again and be back as a panelist for what I believe is an amazing event that helps to educate both UNFCU and potentially non-UNFCU members as well. We have a lot of exciting ground to cover. Obviously, there's always a lot of things going on in real estate. So let's dive right in. Today, we're going to be discussing some crucial topics shaping the real estate landscape for 2025. We're going to begin by exploring changes to regulations that will affect both buyers, followed by a detailed 2025 housing outlook, which will include some trends and expectations for the upcoming year. We'll also take a closer look at how climate risk impact is becoming an increasingly important factor in the real estate market. Additionally, we'll talk about moving and relocation trends, especially as they pertain to shifting dynamics of where people are choosing to live and invest. And of course, I am really happy to get into our newly released real estate magazine, known as the Morris Report, the Buyer's Guide, which will provide essential guidance for buyers who are navigating today's market like yourself. And you'll also get the opportunity to hear a UNFCU success story. It is a prime example of how the credit union's expertise and commitment to its members have made a real difference for many people in their real estate journeys. I'm looking forward to sharing this information with you, and we'll be happy to answer any questions you may have at the end or after the presentation. So feel free to leave them in the chat. Let's get started. So let's begin with a very important and transformative moment in the industry, which have directly impacted buyers. And that is the recent settlement by the National Association of Realtors, also known as NAR. The NAR settlement marked a significant shift in the way real estate transactions will be structured, particularly regarding commission structures and the role of real estate agents like myself. This change is influencing everything from how listings are managed to how commission fees are negotiated. I'll walk you through the key points of the settlement, and I'll explain how it will impact you in your real estate decisions. So the first question usually is, what exactly is compensation in the context of real estate? Compensation refers to the amount a seller is willing to offer a buyer's agent, which is often called buyer-broker compensation. And historically, this compensation was typically displayed in the property listing, and it has always been negotiable. Under the 1990 rule, or traditional commission model, real estate agents were required to offer a commission to the agent who brought in the winning buyer. The commission was usually set at around 5 to 6% and was split between the buyer's agent and the seller's agent. Now, as an example, let's say you're selling a home for $500,000 and the total commission is 6%. The total commission would be $30,000, and that money would be split most of the time evenly between the buyer's agent and the listing agent. And for as long as we could remember, this system has been in place for decades, and in general, it worked well for both parties. However, while the commission was negotiable, some sellers felt that there was pressure to offer certain levels of buyer-broker compensation. The reason for this pressure was the belief that offering a higher compensation could attract more agents to show the property, leading to a quicker sale. And while it's always been negotiable, this perceived pressure led to concerns and some complaints in the market. So things took a little bit of a turn when lawsuits were filed against the National Association of Realtors, claiming that their rules led to inflated real estate commissions by requiring sellers to pay buyer's agents. In these lawsuits, the plaintiffs argued that the system created an artificial inflation of commissions, which sometimes could lead to higher costs for buyers and sellers alike. Now, while the National Association of Realtors have denied any wrongdoing in order to avoid prolonged litigation, the lawsuit was settled. And it was settled at an astounding $418 million. It was a pivotal moment, and it helped resolve concerns about compensation transparency and fairness in the real estate transaction process. Now, as for the payout, while it was $418 million settlement, $83 million was distributed to the affected parties, including consumers and agents who may have been impacted by the commission structure. As a result of the NAR settlement, a new buyer agreement is required. While this agreement may look different depending on the broker or the brokerage, here are the four major components. Number one, the agreement must include a specific and conspicuous disclosure of the amount or rate of compensation the real estate agent will receive. It also should have a clear explanation of how this amount will be determined. This means that the compensation should be clearly outlined in the agreement, whether it's a fixed fee, a percentage, or another method of calculation. This ensures that there's no ambiguity regarding what the agent will be paid for their services. The second component focuses on the objectivity of the compensation. The compensation terms must be objective and not open-ended. This means that the agreement can't simply say the buyer broker compensation shall be whatever the amount the seller is providing to the buyer. Instead, the compensation, like I said, has to be clearly defined. The third component is that the agreement must include a term that prohibits the agent from receiving compensation from any other source that exceeds the amount that they've agreed to receive from their buyer. And finally, the agreement must include a conspicuous statement that broker fees and commissions are fully negotiable. Our team has been practicing buyer agency since 2007. We've often collected fees from buyers. Also, the seller has often paid us. But the primary change in this model is that the seller is no longer required to offer compensation to the buyer's agent. So you may be asking, how does this impact you? It is another line item that all buyers will have to consider when choosing a real estate agent in today's market. Like I said, before the NAR settlement, if there was a $30,000 commission, it would be split between both agents. But after the NAR settlement, the seller will only pay that $15,000 to their agent, to the seller's agent, and not be required to pay any fees to the buyer's agent. And this is why it's so crucial now to select the right type of agent, because the commission is directly tied, truth be told, to the agent's performance. This shift changes the way commissions are handled, and it could lead to different costs for both buyers and sellers in real estate transactions. So now that we've discussed how the recent changes from the settlement are shifting the way commissions are handled, I want to take a moment to hear from you. With several variables impacting the US housing market, from home prices to demand, where is the sector heading into in 2025? We have our first poll question. Which aspect of the housing market concerns you the most? So once again, the first question is, which aspect of the housing market concerns you the most? I see people are starting to answer. Thank you for your participation. I'm just going to give it a few more seconds until we're close to the number of attendees that are here. So the options are affordability, interest rates, housing inventory, future home values, or renovation costs. With 190 results in, I can tell you that affordability is the number one concern facing many, many home buyers, and obviously directly tied into that are the interest rates. So we're going to move on to take a look at the 2025 housing outlook. According to JP Morgan, we can expect the housing market to remain what they like to describe as largely frozen, meaning minimal movement through 2025. So while there will be some growth, which they're currently projecting at about 3% or less, there is still a demand for homes because shelter is a basic human need. So demand for homes is usually measured through existing home sales, and it remains exceptionally low, which is indicating a lack of movement in the market. Now, on the supply side, housing inventory is slowly creeping back up, but it's still below its historical averages, meaning that there simply aren't enough homes available to meet the potential demand. All in all, the housing market will likely experience some limited activity in the coming years, with low inventory and subdued growth continuing to define the landscape. Let's take a look at the supply. According to the US Home Building and Building Products Research Team at JP Morgan, the existing homes for sale have returned to normalized levels across several key metropolitan statistical areas, also known as MSAs. Additionally, new homes are becoming fairly plentiful. In fact, new homes for sale are currently at 481,000, the highest level we've seen since 2007. Despite this increase in the inventory, supply is still expected to be less of a support for the housing market heading into 2025. Single-family existing homes for sale have increased by roughly 20% year over year, but the total number remains near record lows. The ongoing shortage of homes is often attributed to supply tightness, especially when we consider the underbuilding that we've seen over the past decade. However, a long-term housing shortage, isn't entirely clear. Over the past 30 years, new household formations and housing completions have essentially netted out to zero, meaning there hasn't been a substantial imbalance over the long term. So what else may be driving the shortage? One contributing factor for the housing shortage could be increased populations, which is estimated to be around 11.2 million in the United States and possibly higher. This population increase may be also increasing demand for housing more than the official numbers actually suggest. And that's because everyone isn't necessarily buying, but some people who are seeking shelter are also looking to rent. Another significant factor impacting supply is the rise in interest rates. As rental economics have declined, the builders of multifamily units have slowed down new construction. So as we move into 2025, we're seeing a complex picture. Increased inventory, but still a shortage driven by factors like underbuilding, rising rates, and shifting demographics. Now, Ray and Chip touched earlier about the interest rates, and obviously interest rates play a really big role in purchasing a home. So given the currently low levels of both supply and demand, how can the housing market keep growing in 2025? The answer lies in what we call the wealth effect. Specifically, borrowers who have significant home equity or have benefited from equity market growth will likely help maintain positive home price growth, although at a much more subdued pace. So even though income has not kept up with home price growth, existing borrowers are in a strong position. Many of them have built up substantial equity in their home, which means that they're less impacted by some of the price fluctuations. Additionally, renters who own equities may have more money available to put down towards down payments, which could help them effectively buy down their mortgage rates. So despite the ongoing affordability issues, the wealth effect plays a crucial role in supporting home price growth. It helps explain why even in a challenging market, we can expect home prices to continue to rise. So while the market faces obstacles, factors like home equity and the ability for some buyers to leverage assets may keep the housing market stagnant. However, while there are predictable factors affecting the housing market, Mother Nature is unpredictable. So here's our next poll question. Do you believe that climate change poses a significant risk to the US housing market? Yes, it's a major risk. Yes, but only in certain areas. No, it is not a significant risk, or you're unsure and need more information. I'll give it a few seconds to give everyone an opportunity to cast their choice. After all the votes are in, do you believe that climate change poses a significant risk to the US housing market? The winning choice is yes, but only in certain areas. And I think that that is a very plausible answer, considering that different geographical areas will warrant different types of climate impact. So moving on to climate risk. Climate risk could have a significant impact on the US housing market in 2025, specifically housing prices and development patterns. So first, let's talk about decreased values in higher risk zones. As climate risk like flooding, wildfires, and hurricanes become more frequent, homes located in these high-risk zones are likely to see declining property values. Buyers like yourself should be more cautious about purchasing homes in areas that are prone to natural disasters. The next is rising insurance costs. Like Chip said, as the frequency of climate-related issues increases, the insurance premiums for properties in high-risk areas are also expected to increase. So there's definitely a possibility that rising insurance costs could further reduce demand in these regions and affect home prices, since buyers will now have to factor in the additional ongoing expenses. Another critical factor is impact disparity. Not all communities are impacted the same way. Wealthier areas might have the resources to adapt and recover from the risks, but less affluent communities could face longer-term declines in housing values and livability. Development patterns will also change in response to climate risk. As certain areas become less viable for development due to flooding, wildfires, or other risks, you can expect developers to shift their focus to safer, more resilient regions. And finally, climate migration is also likely to have a profound effect. As people are forced to move away from regions impacted by climate change, there will be a growing trend of climate migration, where individuals and families relocate to areas less vulnerable. Now that we've talked about the potential impact, here's what you can do. First, as buyers, you should conduct a climate risk assessment. Before purchasing any property, you should evaluate the potential risks of natural disasters. There are many online tools and resources that are available to assess these types of risks. And by conducting these assessments, you can avoid buying in an area that has a very high risk of climate-related damage. Secondly, you should speak to an insurance rep. As we mentioned earlier, rising insurance costs in high-risk areas are becoming more of a concern for home buyers. And finally, you should also prioritize energy efficiency when looking for a home. Homes that are energy efficient not only help reduce your carbon footprint, but they can also provide long-term savings on utilities, especially as energy costs rise. Homes with better insulation, efficient HVAC systems, solar panels, and other energy-saving features are more resilient in the face of climate-related challenges. Let's dive right into another important topic, which is job relocation and moving trends. The data is showing that while job relocation may not be the most common reason that people move, it's a significant driver of changes in local economies and housing markets. As workers move to new areas, they not only bring themselves, but they bring increased demand for housing, which can drive up prices in regional development. Recent data shows that states like Virginia, Texas, Georgia, South Carolina, and Tennessee are seeing the highest influx of workers. These states have strong job markets, lower living costs, and attractive business environments. Some states with the largest job migration gains are Virginia, Maryland, DC, and Texas. Tennessee also stands out with Nashville and Memphis attracting professionals due to growing sectors like manufacturing and healthcare. On the flip side, high-cost states like my very own New York and California are seeing more people leave as workers seek more affordable options without sacrificing their career growth. Now, on the other hand, California and Louisiana are seeing more professionals leave than move in, mainly due to high living costs and slower job recovery. These migration trends are driving increased demand for housing in popular areas, which pushes home prices up. For example, in Virginia, they've seen home prices rise by nearly 13% since last year. They're also seeing increased residential construction in states like Texas and South Carolina in order to accommodate the growing number of residents. Not only is residential real estate being impacted, but so is commercial, as businesses expand or relocate to meet the growing workforce, especially in industries like tech, finance, and healthcare. The influx of workers in certain states is not just a trend. It's reshaping local real estate markets. It is driving demand for both residential and commercial spaces. And as it continues to be a key indicator for real estate, it's important to keep track of all of these patterns to stay ahead of any shift in the market. We are now, so in terms of talking about relocation and migration trends, I just wanted to share that the corporate network has a relocation and referral department. So in our daily work patterns, we're licensed in New York, but we work within the United States and also internationally. And Corcoran's relocation and referral department is dedicated to helping our clients with national or international real estate. We can assist individuals and families who are relocating to a new area. We can provide an unlimited range of services to also ease the moving process. We offer personalized support, connecting you with real estate professionals in your area, providing information on local neighborhoods, schools, and/or services, and helping you with logistics to find temporary housing if necessary. For UNFCU members, this service could be incredibly valuable when relocating to a new location, whether for personal or professional reasons. Our expertise can obviously help you navigate the complex world of finding a new home, whether it's buying, renting, or seeking temporary accommodations. And yesterday, the Corcoran Group announced that we just opened up another office in Lisbon, Portugal. If any of you are familiar with Portugal, it's known for its charming streets, historic appeal, vibrant culture, stunning waterfronts, and from what I've heard, some of the best seafood. So their actual real estate market in Portugal is booming, and it's driven by strong demand from both local and international buyers. So with the competitive cost of living and a thriving tourism industry, including rental demand for premium properties, with all of these factors, when you take all of these factors into consideration, you can understand why Corcoran continues to expand their relocation and referral network. One of my very own major success stories is I did this presentation for UNFCU a couple years ago, And once the presentation was over, one of the members called and we conducted a buyer consultation. And he was moving from Boston to Texas. So the image that you see on the screen is his quote, his feedback from being able to purchase his first home. And what's really profound about this is the idea that it's possible, right? He says, I'm glad I did not miss the opportunity to get in touch with you after watching your presentation. And he luckily, I believe he flew down to Texas. We put him in touch and partnered up with another agent there. And the weekend that he flew down was the weekend that he found his first home. And he's been there ever since. So we can, I have some information that I can share to ensure that everyone remains in touch. But that is the Morris report. So I have a copy here that I can show you. There we go. Both myself and my partner, Anthony Morris, we've curated this buyer's guide to provide you with industry insights and luxury level real estate services. And what you can see here are all the services that we offer. And like I told you, we have been practicing buyer agency since 2007. So the next slide has a QR code that everyone can scan to stay connected, but to also receive a copy of the buyer's guide. It's a great resource for you to have in your home buying journey. And you can also stay connected with me on social media. One of the common questions that I get from people often is it a good time to buy? The answer is it's always a good time to buy. And the reason I say that is if you choose the right team, your team will analyze your particular needs and ensure that any solution is tailored to you. I know that UNFCU does that. I know that Corcoran does that. And I know that our team does that. So thank you again for your time today. Please remember to scan the QR code to get a copy of the Morris report. We have it both in digital and hard copy. And we conduct buyer consultations all day. So please feel free to reach out to me. I'd be more than happy to help you. And I think we're going to look at a few of the questions that came up.
Lisa, thank you so much for all that phenomenal information. This is going to help prospective members and members guide their way through this home buying process. So thank you so much. And you're right, we're going to head to some questions that I think are important for all of our members and prospective members to hear. I guess this is the elephant in the room, and I've had several questions pertaining to that this morning, and the question is in regards to since the new settlement with NAR, what is the market average commission suggested to be paid by the buyer to their agent in New Jersey, let's say?
It's interesting because I think that for agents like myself who have been practicing buyer agency for a while, I think my own commission percentage can range anywhere from 2 to 3%, right? I think that in this environment, buyers agents are very flexible because there's something to be said about the amount of effort that is required. Historically, a buyer could meet an agent and they can go and see a property and they would be paid a commission. But now there is the need for real value, real results, and real expertise. And I think that on average, we're probably seeing commissions between like 1.5% and 2%. But you could imagine that buyer agents like myself who are very experienced know that the amount of time that you're going to be looking for a home is cut very much shorter because of the network and resources that we have. So similarly, the way that any buyer would look at all of their line items, I tell you that the buyer agent fee is negotiable. So it should be factored in accordingly to ensure that the larger commitment is being met, which is you're finding the home that you want. I always tell my clients that the commission is secondary. You know, obviously, we're all earning a living, but I truly believe that if we can achieve your goal, paying someone for their services kind of just goes hand in hand.
Absolutely. I love the transparency that the system has brought to us, and
Yeah,
I think that that's really good for consumers all over the country.
I agree.
The other budding question is, how will the current political and financial events, tariffs, stock market
Yeah,
crash affect housing prices? I guess I can take the first part in terms of
sure.
the stock market. You know, if you are invested in the stock market and your value of your stocks have gone down, we do base, in large part, your asset valuation on those stocks. So it could affect the amount of money that you have for reserves. But that's really a case by case basis. But I really want to hear from you, Lisa, in regards to
Sure.
how it might affect the buying and selling of real estate here.
Well, here's what I can tell you about when certain variables move, right? I also serve as a seller's agent. So when the interest rates were really high, we noticed our sellers were more flexible to negotiations and concessions and price reductions in order to, achieve a deal. Um, I think that it's too early to tell, despite the initial impact in people's stock portfolios. It's a little too early to tell what the demand will be, what the impact will be on housing. What I can tell you about the real estate industry, the mortgage industry, and homes in general, we're very resilient. So it doesn't matter what the market does. The real estate industry and the experts that help keep this industry up, we always come up with a solution to ensure that buyers and sellers can have a meeting of the minds. So I think with the decoupling, as we call it, the decoupling of the real estate commissions, but also having buyers being able to now choose their broker. It's important to stay on top of the changes in the economy, but know that we are actively working to ensure that there are solutions, first-time home buyer programs, adding sellers concessions to loans. There's a possibility that some, buyer agent fees may be able to be rolled up into your loan. So the market will come up with solutions to ensure that people's homes have value, and to ensure that we can keep moving forward. But it's a little too early to tell about the short or very specifically the long-term impact that the political environment and the tariffs are having yet.
I would agree with that. That's a great way to explain it. And as we all know, the real estate industry goes through fluctuations based off of the current markets that we are in, and we've always made adjustments to the market. And none of us are market leaders; we're market followers. So, but we do have the tools necessary in our tool chest in order to help you through almost any market that is presented to us. I did have another question, and it's from Sawala Yosef. And he's saying that according to 2022 data, there's roughly millions of homes still sitting empty in America. So how is there anything close to a shortage of available homes? Are you familiar with that statistic, Lisa?
So there are a lot of what we know since COVID, there are a lot of both empty residential and commercial buildings, right? There's also a lot of, there are rent stabilized or rent controlled buildings as well, right? What's interesting is that in order for people to identify a housing shortage, there needs to be an identifying of what is available. So what I've discovered in real estate is when we talk about a housing shortage, while there are available units, it's because the units are not necessarily matching what people are looking for, right? So there are like I currently have a few buildings for sale that where the entire building is tenant occupied, but the building is on the market, but it's not necessarily moving as quickly as it should, right? We have, like I said earlier in the presentation, the homeowners that have equity, they're not necessarily, they don't feel pressure to rent. So while there may be an available unit in their home or available units, the people that own these buildings are the ones that really move the needle. So you have to put units out to the market and make them available, as opposed to just having them be a line item where you're just buying and holding and then waiting for the right time to release them to the market.
Good answer. Got another question specifically for the New York area. From your map, there were several areas that were in red. And how does that affect buying and selling? And are there differences between areas specifically in New York?
So it's interesting because I think with New York, while we do have some climate challenges, we don't have the same kinds of climate challenges that other areas have. And I think that when we talk about specific geographical areas, there are areas in New York where there's increased chances for flooding, but New York is a very unique place. Real estate in New York does not slow down. People will buy anything in New York. And sometimes, whether they're moving in or moving out, I've noticed that there hasn't really been any major changes to some of the policies that kind of affect home buyers' decisions. But I think that paying attention to the market, talking to the right experts, but also steering away from some of the distractions. There are a lot of headlines and opinion pieces out there, but this is ultimately, this information is really just based on actual facts and real statistics, right? So in an area like New York, even though it's the state, the monitoring of whether you're, on Staten Island or whether you're in Midtown, you're gonna still have to do an assessment of the area to figure out what may be impacting those areas.
Sounds great. Thank you so much, Lisa. I think that that takes us to the end of this segment. We've got a 5-minute break. We are running over, but I know that we had figured that we would finish about 12:20. I think that based off of where we're at right now, we will finish right around 12:30. And I want to make sure that we get through our entire program for everybody. And I'm hoping that everybody that's on right now can stay with us because the last segment that Chip has, the home buying process presentation, is really an important one. And then we'll wrap it up with myself, Chip, and Lisa to answer any other questions that you might have before we sign off. So we'll start our 5-minute break, and then we'll be back at roughly 12:13. So thank you again.